with the local equities markets recording another weekly negative close. Analysts at Vetiva Securities say they expect the market to start the week mixed as investors continue to cherry-pick attractive counters across the board. Joshua Odebisi, Senior Banking Analyst at Vetiva Research, joins me now to focus on the banking sector as we look at the broader markets as well. Joshua, it's a pleasure to have you on the show today. Before we quickly touch the banking sector, first of all, what do you make of the market's performance recently, and where do you see it headed as we enter the last month of the year?
Thank you for having me. So obviously we know that the market has been quite mixed. A few positives here and there, a few investors coming in to, cherry pick, like we said. But overall, I think the trajectory has been a little bit negative after some quite positive activity, maybe at the start of the quarter. But overall, I think that this is purely down to just sentiment around, end of year performance and how we see the overall economy performing. But I think December is around the time when investors really start to come into the market and take positions ahead of next year's full year performances. Now, based on the fact that we're still a little bit optimistic about those, we do believe that we will see that usual end of year rally across some of the stocks, which should, drive growth in the overall exchange. Although the exchange has still been positive year to date, we expect that to at least remain for the rest of the year.
I imagine that there will be a buzz around the telco space with MTN looking to issue some shares. But bringing our focus back to the banking sector, because that is typically what really drives the market. We won't see earnings until next year, but how do you see things closing out for banks, given the market conditions? As you know, the MPC is holding its last meeting this week. Overall, what are your thoughts about how earnings are likely to evolve in the fourth quarter?
Well, I think looking at the first 3 quarters of the year, we saw that a few banks did report year-on-year growth. But overall, I think the trajectory was still a little bit too negative for some investors. But I think that based on the fact that Q3 performance alone was still in line with expectations, I think that Q4 should also be fairly stable. I wouldn't go as far as to call it overly positive, but definitely over year-on-year performance is not going to be 10% lower than 2020. But overall, the optimism for 2022 is still there because we expect the economy overall to improve, and so this should affect both interest and non-interest revenue lines.
Right. Looking back at how the banks have performed over the course of this year, I think many will be quite happy with it. And the reason I say so is because that impression that an economic slowdown could hurt the banks, and we may begin to see it manifest in non-performing loans. Would you agree that we haven't really seen that? And if so, do you think this is something that could begin to manifest next year?
Well, I'm glad you brought that up because from the very beginning, I was completely against that particular position, and I felt that it was an overly bearish expectation that there would be any kind of explosion in NPLs this year. And we definitely did not see that. And with the recovery of the economy all but confirmed with the Q3 GDP results, I think that we can put all of that sort of to bed. Definitely NPLs and loan loss impairments went down in Q3. I mean, loan loss impairments did moderate quite significantly year on year. So I think that there's definitely less of a chance of that affecting banks' overall profitability going forward.
All right. Very quickly, if you can just cherry pick for us, which bank names do you like the most?
Well, I mean, definitely, the truth is, for whatever reason, the market has sort of reacted quite negatively to GT Bank's results, although I think that based on the economic factors that were at play throughout this year, they definitely did as well as they could have. Probably their non-interest revenue was not as strong as it should have been, but I think that going forward in the near to medium term, with their holdco structure, fully in place and expected to be reflected for the whole of 2022, that should start to show signs of growth. Also, Zenith Bank has done quite well, given the circumstances. but the strongest performers, I think, have been Access and UBA with regards to year-on-year growth, at least in the tier 1 space. In the tier 2 space, we've seen Fidelity Bank do some really, really impressive profit growth year-on-year, and so that's also one to look out for.